While every retail investor is watching XRP trade at 134 and asking why the price isn't moving, Brad Garlinghouse just sat in front of a Fox Business camera and said something that nobody in this space has fully processed yet. Ripple Treasury moves $13 trillion in annual corporate payments. $13 trillion. And 0% of it is running on crypto rails. Not yet. Most people heard that and thought, bearish. The banks aren't using XRP. I thought the same thing for about 4 seconds. And then I asked the only question that actually matters. Why aren't they using it? And what happens the moment that answer changes? That is what we are decoding today. Stay with me. Welcome back. This is Crypto Empire. We do not do hype here. We do not do moonboy targets with no logical foundation. What we do is pull apart the mechanisms that drive real institutional money and show you what they actually mean for the asset you are holding. Today, we decode the $13 trillion silence. Not financial advice. Let's go. Let me start with a hard truth that most XRP holders are not sitting with. Ripple is winning. XRP is not, yet. And those are two completely different statements. Ripple just reported the best quarter in company history. Prime brokerage revenue tripled since the Hidden Road acquisition. Fortune 500 treasury teams are running on G-Treasury infrastructure. Deutsche Bank, Aviva Investors, Societe Generale. 3 of the most risk-averse names in global finance started using Ripple's payment rails in early 2026. The company is executing at a level it never has before, and XRP is sitting at $1.34, down 40% from its January high, down 65% from the all-time high in July 2025. That gap is not random. It is structural. And once you understand the structure, the gap becomes one of the most interesting setups in this entire market. Here is the mechanism most people are missing. Banks using Ripple right now are settling in RLUSD and fiat, not XRP. The $13 trillion flowing through Ripple Treasury is flowing in corporate currencies, not XRP. Revenue from Ripple's acquisitions accrues to Ripple Labs equity holders, not XRP token holders. Why? Not because XRP is inferior. Not because banks prefer RLUSD. Because using a volatile digital asset for corporate settlement without statutory legal clarity is a fiduciary liability. The compliance teams at Deutsche Bank did not say, "We prefer RLUSD." They said, "We cannot legally justify using XRP for settlement without a federal framework that removes the legal exposure." That is not a preference. That is a compliance wall. And here is the insight that changes the entire picture. Compliance walls are not permanent. They are legislative. They are designed to come down. The Clarity Act is the exact legislation that brings this specific wall down for U.S. banks and, through regulatory mirror dynamics, for international banks watching the U.S. framework. When it passes, and we are going to talk about exactly what when looks like right now, the choice between RLUSD and XRP stops being a legal question and becomes a cost question. And on cost, XRP is not competitive with RLUSD. XRP is in a different category entirely. Let me show you the math that explains why cost efficiency is the final unlock and why the numbers here are not small. Cross-border payments globally move approximately $150 trillion annually. The infrastructure currently handling that volume relies on Nostro and Vostro accounts, pre-funded pools of capital sitting idle in correspondent banks around the world, ready to absorb settlement risk. The Bank for International Settlements estimates that global financial institutions hold somewhere between $1.8 trillion and $27 trillion in locked Nostro capital depending on which part of the network you measure. That is dead capital, earning close to nothing, sitting in accounts as collateral against the inefficiency of legacy rails. Now run the XRP model against that. On-demand liquidity with XRP. Source currency converts to XRP, crosses the ledger in 3 to 5 seconds, converts to destination currency on the other side. Total cost, fractions of a cent per transaction. pre-funded account required, 0. Idle capital required, 0. If XRP captures even 5% of annual cross-border payment volume as a bridge asset, that is $7.5 trillion flowing through a ledger with a fixed maximum supply of 100 billion tokens, of which approximately 55 to 57 billion are currently in circulation. Think about what that means for price mechanics. Higher utility volume through a fixed supply does not just increase demand. It increases the minimum price XRP must hold to serve as a viable bridge asset without creating slippage that destroys the cost advantage. The math is not a prediction. It is a liquidity requirement built into the design of the system. This is why Standard Chartered, not a crypto newsletter, not an anonymous Twitter account, Standard Chartered Bank, maintains a 2030 target of $28 per XRP even after cutting their near-term 2026 target during this correction. Their base case for end of 2026 is $2.80. Their 2027 target is $7. Their 2028 target is $12.60. 2,000 XRP at today's price of $134 costs $2,680. At the Standard Chartered 2027 target, that position is worth $14,000. At their 2030 target, $56,000. That math does not require you to believe in magic. It requires you to believe that cross-border payments are a real industry with real volume, and that efficient infrastructure eventually captures the flows it was built to move. Now let me show you what the smart money is doing while retail watches the red candles. November 2025. 7 spot XRP ETFs launch in the United States. These are not speculative vehicles. They are compliance-grade institutional products that allow pension funds, family offices, and sovereign wealth vehicles to hold XRP exposure without touching the underlying asset directly. Within weeks of launch, Goldman Sachs discloses a $153.8 million position across 4 XRP ETF funds. Not a retail bet, a structured institutional position from the most influential investment bank on Earth. March 17, 2026, the SEC and CFTC jointly issue a binding federal rule classifying XRP as a digital commodity alongside Bitcoin and Ethereum. This is not a court ruling that can be appealed. It is not staff guidance that can be walked back. It is a codified regulatory classification with the full force of federal law. Let me say that again clearly. XRP is now legally classified as a commodity under federal U.S. law. The gray zone that kept institutional capital on the sideline for 4 years, that zone is gone, and yet XRP trades at 134. Ask yourself this brutal question. Does Goldman Sachs, a firm that spent 4 years on the sideline during the SEC case, move $153 million into XRP ETF positions in the weeks after launch and then watch the commodity classification land without having modeled exactly what comes next? They do not move without certainty. They do not position without a thesis. The fact that Goldman is in at these levels, through a 43% year-to-date decline, through the correction that shook out retail, is not a coincidence. It is a signal that the people with the most sophisticated risk models in global finance have looked at this setup and decided the position is worth holding. Retail is watching the price. Institutions are watching the pipeline. And the pipeline is $13 trillion in corporate payment volume that Garlinghouse himself described as the biggest untapped opportunity in finance, 0% of which has touched crypto rails yet. Here is where we get specific, because April is not a normal month for XRP. The Senate returns from recess on April 13th. The Banking Committee markup targeting the Clarity Act is scheduled for the second half of April. Garlinghouse put passage probability at 90% on Fox Business. Polymarket has it at 70 to 72%. Galaxy Digital set the hard deadline. Clear committee by end of April, or the Clarity Act is likely dead for 2026. Senator Moreno confirmed that midterm election dynamics close the legislative window by May. The window is 3 to 4 weeks wide, and then in May, Goldman Sachs files their Q1 2026 13F disclosures. That filing tells the entire institutional market one of 3 things. They held through the correction. they trimmed, or they added. If Goldman held $153 million through XRP's worst quarter of 2026, every institution watching that filing gets one signal: the smart money did not flinch. If they added, the signal is louder than anything any analyst can publish. The legislative catalyst and the institutional confirmation signal are both arriving in the same 6-week window. The fuse is not being lit. It is already burning. The question is whether you are positioned before it reaches the powder or after. Here is the positioning reality that most people never calculate honestly. There are between 18 million and 25 million unique human beings on Earth who own any XRP at all. Of those, only the top 10% hold 2,300 XRP or more. 2,000 XRP at 134 costs 2,780, less than a used car. Less than many people spend on a vacation that fades in 5 years. That position puts you in the top 10% of a global asset at the most consequential regulatory and institutional inflection point in that asset's 14-year history. The people positioned above 134 are accumulating right now, not because the outcome is guaranteed, but because the setup, legal clarity, ETF infrastructure, Goldman positioned, Clarity Act 4 weeks from a vote, has never looked like this before. Nobody rang a bell at 17 cents in 2020. Nobody announced the turn when the SEC case started breaking in 2023. The price does not announce the inflection. The infrastructure does. And right now, the infrastructure is announcing it clearly. Commodity classification, law, ETF infrastructure, live, institutional capital, positioned, legislative window, open for 3 more weeks. The $13 trillion is sitting on legacy rails that cost more, settle slower, and require billions in idle capital to function. XRP was designed to replace every one of those inefficiencies. The question is not whether the migration happens. The question is whether you are holding when it does. Macro storms pass. Infrastructure lasts. I am crypto empire. The math does not lie, and the system is almost complete. Comment pipeline below if you made it to the end and you understand what is actually being built here. Stay sharp, stay patient, stay positioned.